Look, we are deeply into crypto summer, although the fun part starts in crypto fall, which will start this June post halving. Well, then what's going to happen is then we're going to cut the aggregate supply. The halving is going to happen. Instead of 900 a day, we're going to have 450 a day. And the ETFs are buying 8 to 10,000 a day. So let's just do that math. If there's only 900 new and they have to buy 10,000, that means they have to find someone to sell. Well, there's a whole bunch of people, they call them hodlers or hodlers, they don't want to sell. They're like, I'm not going to sell at any price.
In this video interview with Morgan Creek founders, CEO and CIO Mark Yusko, he explains why he believes we're in the early stages of the greatest financial opportunity ever. As the 2024 halving approaches, Bitcoin's yearly issuance is set to drop below 1% of the total available supply, lower than even gold.
You do have Bitcoin prices back below $65,000. What's happening under the surface?
Bitcoin dropped 3%, falling below $70,000.
However, Bitcoin benefits much more from this phenomenon because of its fixed supply. Mark explains that we could be seeing parabolic price movements as early as June 2024. He emphasizes why, now more than ever, it is critical for interested investors to get off zero. He also stresses the importance of this mindset for investment managers and, towards the end, addresses the concern that it's too late to get into Bitcoin. He also touches on the ETFs and halving and how they serve to accelerate this narrative. Let's dive in to hear it all.
Bitcoin, I've been talking about this forever, literally. The whole hashtag get off zero. Zero is the wrong number. And we're starting to see that permeate everywhere. But now we have these ETFs, which make it possible to buy without going through all the hassle of having a device and deal with the bearer assets. And it's such a big deal. And I don't think people really appreciate how big. I mean, it's pretty amazing. You can go back a year, and a year's not that long, right? But a year ago, we were sitting just around 20K. We had rebounded 33% off the Hurricane Sam bottom of 15K, back when, everyone was like, oh, it's going to zero. Zero is a really big difference from $15,000 per coin. Now, it was zero in 2009. I mean, literally zero. There was no value in the network. It was a science experiment. People didn't really know what to think. Was this really anything? Today, if you've spent any time with Bitcoin, you understand that it is the future of money, right? And by money, I mean the base layer of money equivalent to gold. Beyond that, Michael Saylor's been on TV lately talking about how it's digital property. Even calling it a cryptocurrency is undervaluing what this means. And if I want to send you money, right, fiat currency, you have to have a bank account. I have to have a bank account. They charge us fees for that. I send you a wire transfer. They charge me a fee for that. And eventually you get the money.
Takes time.
Well, that system worked really, really well for hundreds of years, 838 years to be exact. And now we have a better system. And as more and more people realize that, we went from 20,000 a year ago to over 70,000 today per coin, and a market cap well in excess of $1 trillion. So again, from zero 15 years ago to over $1 trillion. And here are two things for advisors that are really, really important. Actually, three things. One, it is Bitcoin, the best performing asset of any asset that you have in your client portfolios, 12 of the last 15 years. And it's on pace to be, 13 out of 16.
When the global financial system collapsed in 2008, it became clear as day that the trust system that had served us for 838 years was now inefficient. Many experts have claimed it's no coincidence that Bitcoin was created and quickly rose to dominance after this event. Mark has just reiterated that thesis and explained that the transition of the global financial system to Bitcoin is not a possibility, but rather an inevitability. Bitcoin will eventually become money, the equivalent of what gold is today. But Michael Saylor's insights on the matter help paint a clearer picture. Saylor has explained that because Bitcoin is digital, it is superior to gold and will not suffer from gold's limitations. Sit back as we bring you more clips from Yusko's interview.
Since that creation, what they hard-coded in was this process of something called the halving. So in the beginning, every 10 minutes, they would create a block. And in order to create a block, you have to have miners, which are basically just computers, to cryptographically secure that data, create a hash. Okay, and in order to entice someone to buy computers and pay for electricity and do this, you pay them what's called a block reward. So the way Bitcoins were created is every 10 minutes, back in 2009, 50 Bitcoin were awarded to the miners. Every 4 years, that number gets cut in half. Well, if you think about that, the genius of it is if you cut the rewards in half, well, then some of the miners would go out of business. Well, the miners don't want to go out of business, so they hold their Bitcoin longer until the price rises. So if the price then starts to rise, well, what happens? Well, that causes attention and that causes activity. And so we get these cycles where the price starts to go up. And the problem with the price going up of anything, whether it's Nvidia shares or MicroStrategy or Bitcoin, the gamblers start to come in. They're like, oh, look how high this is going. I'm just going to buy it. Did you do any work? Well, no, it's just going up. I'm going to buy it. And so it pushes the price to crazy town. So that was 2017 at 20,000. The fair value of the network was 10,000. We got to 20,000. In 21, the fair value of the network was 31,000, and we got to 68. Well, eventually, the kid says, hey, that guy's not wearing any clothes, right? The emperor has no clothes. And the price will adjust, and that's crypto winter. So we went through crypto winter in 21, and we went all the way down, right? All the way down to 15,000, way below the fair value, because the fair value had started to creep up into the 40s. So we were way below fair value. Well, then what happens? Well, when any asset, again, whether it's a cannabis stock or, a bond, it doesn't matter. If the price is below the fair value, because that's one of the things about price. Price does not equal value. In fact, John Burbank, one of my good buddies in the hedge fund, said price is a liar. So as those investors, people like me, I consider myself a value investor. I like to buy things below fair value. So when the price was 15 and the fair value was in the 40s, I'm waving it in. Like,
come on in, yeah.
So gonna buy it. So that was a year ago. And for the last year, we went from crypto winter in 21 into crypto spring, right? Which is where the price kind of stabilizes. Then crypto summer, which we're in today, right? So from June of 23 to June of 24 is crypto summer. And crypto summer is where you start to get back to fair value. So fair value today is in the low 50s. Well, we got there right before the ETF launch. And now we've exploded up to 70. It's like, what's going on? Supply and demand. So if you think about supply and demand, it looks like this. So I can increase my demand, right? I can shift the aggregate demand curve out and the price goes up, right?
Yeah,
just
math. That works, yeah.
Well, then what's going to happen is then we're going to cut the aggregate supply. The halving is going to happen. Instead of 900 a day, we're going to have 450 a day. And the ETFs are buying 8 to 10,000 a day. So let's just do that math. If there's only 900 new and they have to buy 10,000, that means they have to find someone to sell. Well, there's a whole bunch of people, they call them hodlers or hodlers. They don't want to sell. They're like, I'm not going to sell at any price.
The upcoming halving will cut Bitcoin supply to 450 coins per day. Yesterday, the Bitcoin spot ETFs marked 4 days of consecutive net inflows, suggesting that Grayscale's impact on the market is now negligible. This is extremely bullish, as the halving is now only a few weeks away, even though prices still sit below the new all-time highs. Mark has explained that we're unavoidably heading for a nexus event that will cause Bitcoin prices to rip. There will be some consolidation on the way there, but overall it's very bullish. Next, Mark sounds a short warning for investors who think they've missed the chance to invest in Bitcoin.
Maybe the national anthem has ended. Maybe we're in the first inning, but the game's barely started. I mean, we are at just the knee of the curve. So if you think about an S curve, you get 10 years for the early adopters, 10 years for the the middle 80%, and then 10 years from maturity. We're just entering that second decade. First 4 years, science experiment, doesn't really count. The next 10 years, real. This year, real. But we're not even a year into the upward slope of the S-curve. And so to say you missed it, not even close, right?
Skybridge Capital CEO Anthony Scaramucci set a conservative 170,000 USD price target for Bitcoin this cycle. He was quoted as saying the following in an interview with CNBC.
I've been saying that it's about $170,000 for this cycle.
Maybe the ETFs played a role in Bitcoin's comeback. I think we can agree on that. And when Wall Street gets a product like this, it becomes a selling machine, generating lots of demand for the product. This ETF-fueled increase in demand in conjunction with the expected supply shock due to the halving are setting up the perfect storm that Mark predicted. Mark has also stressed that contrary to popular opinion and crypto bro advice, it's not too late to invest in Bitcoin. The game's barely started. While this contrasts slightly from an interview from a few years ago, where while using the same analogy, he said the game had not even begun. Mark is confident that it's still very early. What do you think about Mark Yusko's and Scaramucci's bullishness? To see the latest in crypto news, watch this video here.